Hey guys, Josh Culler here, the host of the Good Success Podcast. Hey, I'm just dropping in here to let you know that we are giving a free book away. Yes, a free book called Active Turnkey, The Best Way to Buy Rentals by Tom Olson himself, the president of Good Success. Yes, I did say we are giving it away for free. All you got to do is go to goodsuccess.com/ATKbook. Again, that's goodsuccess.com/ATKbook. as an active turnkey. And we're going to cover the book. So we're going to actually pay for the book and give it to you for free. We're just asking you to cover shipping costs, which is very minimal compared to the value that you're going to be getting in the book. So if you are interested in learning how to create financial freedom with real estate, go get your copy now. Again, that is goodsuccess.com/ATKbook. Thank you for listening to the Good Success Podcast, and I hope you enjoy this episode. Welcome back to the Good Success Podcast. I'm your host, Josh Culler, and I got Tom Olson, president of Good Success, sitting right here next to me. It's No Shave November.
Yes.
I'm
hunting, right?
You're hunting.
Isn't that what everybody always says? I've never hunted in my life except for one time, and I almost got shot. So I said I'm not doing this anymore. So, but that's my excuse.
It doesn't look bad.
I'm sticking to it.
It's scruff. I like it, man. It looks good. But anyway, we got Eddie Wilson,
yes,
CEO of Affinity Worldwide, on the podcast. Eddie, what is going on, man? It feels like forever since I've seen you, but it's just been since the Atlanta Think Realty.
Very excited.
It's been a while. I'm just curious. It's like the 26th of November, and if this No Shave November thing is like real, like why doesn't Tom have a full-on beard, right? Like
that's true. That's true.
See, actually, it was like Friday. I shaved on Friday, and I would have shaved if I would have known we were doing a podcast today. But you know,
it's okay.
See, this is no shame for Josh.
Yeah, this is no shame. This is
the only spot that'll grow in.
Yeah, that's it. It spots everywhere else, so it doesn't grow. So. Anyway, but it's awesome to have Eddie on the show. So Eddie, like I said, is out of Atlanta, Georgia. Actually, he's in Kansas City right now. You said you're snowed in,
yes,
which is awesome. We kind of caught him. Tom said this is a last minute thing, but we've been trying to get Eddie on the show, but he's been traveling everywhere. And finally, I texted him this morning. I'm like, hey, Eddie, when can we get you on the podcast? He said, will today work? I'm like, yes. So you got a snow day, so we got him on the show.
Well, I'm just curious, what does a snow day mean in Kansas City?
So honestly,
you guys got like 3 feet of snow, right? Like 3 feet, and there's like huge drifts of 6 feet there, right?
So honestly, it's crazy. It's literally like 6 inches, but I think all 6 inches turn to ice. So it's like this massive shelf on the expressway, and it's kind of crazy here.
That is dangerous. And that portion of the year. That portion of the year of the country, like in that middle section, sometimes it just gets ridiculously brutally icy. So
yep, absolutely. So like we said, Eddie. Oh, I just threw my pen. Eddie is out of Atlanta, Georgia, but he's in Kansas City right now. And he is the CEO of Affinity Worldwide. He's a Think Realty coach. So you guys, if you go to any of the Think Realty expos, you'll see us, but you'll also see Eddie there. And he's always speaking on main stage and everything. So make sure you take advantage of that. And he's also on the Forbes Real Estate Council. He's a founder of Christian Media International, which maybe we'll have him talk about these things here in just a minute. Then he's the CEO of Go Media. Good Success Mastermind member since day one, since our very first, the inaugural meeting, he has been with us. And he is also our Good Success Award winner. So you guys know that we hand out our awards once a quarter, but then once a year, we started handing out a Good Success Award that encompasses every single core value that we have. So Eddie was the winner of that. We definitely appreciate him and being in the mastermind. But we'll come back around to him in just a second, have him introduce himself. And then we got a very, very, very intense podcast coming up. I got a lot of awesome questions that we're going to ask Eddie. So first and foremost, if you guys haven't already, make sure you have subscribed to the Good Success Podcast. We're on Spotify, Apple Podcast, Google Play, Stitcher, all the podcast platforms. Just go there, search Good Success, and then you'll find us there. If you're listening on the Facebook premiere video right now, make sure you do that. Subscribe and leave us a review if you are able to. We would much appreciate that. We would love to hear your guys' thoughts on these podcasts. And if there's anybody that we can interview for you, you guys have any suggestions, that would be awesome. And then the Good Success Mastermind, the fourth quarter of 2018 ended a couple of weeks ago. The first week and a half of November, second week of November is when we had that. And it was in Miami, Florida. It was awesome. It was warm. And then our next event is going to be in February 4 through 8, and that is in Dallas, Texas at Quest Trust Company's office. So we appreciate Quest hosting us. It's going to be a fun event. It's going to be awesome, a full week. So we're splitting the group into two. So Monday, Tuesday is group one. Wednesday is the middle day. We're having a networking day, a lot of fun, maybe a couple keynote speakers, some awesome stuff going down there. And then
don't forget about our weight loss challenge.
Our weight loss challenge. Yes.
Yes. So,
Jeremiah's been killing it.
Yes,
man.
Jeremiah is killing it, but Jeremiah and Mo Matthews decided that enough was enough, and that that their body was a temple and they needed to be a better steward of their body, and they're both in this weight loss competition. So whoever wins gets the satisfaction of watching the other one dance in front of the stage with a grass skirt and coconut bra. So that's going to be that's going to be something, Eddie. You're not going to want to miss that day. So that's going to be on Wednesday.
Sounds very interesting. Yeah.
So make sure you're there, Eddie. But yeah, that's awesome. I don't know. Mo's, I feel like he's doing something, but he's just not talking about it.
Yeah, I think Mo's trying to be the sleeper. He's trying to be, he's sandbagging it a little bit, showing everybody all the food he's eating and not really showing everybody the other stuff. But I don't know. I think you guys both are going to be doing something good, and I'm proud of both of you guys.
Absolutely. We're definitely proud of them. So the next event, like we said, is in February 4 through 8 in Dallas, Texas at Quest Trust Company's office. So if you guys are interested in that, go to goodsuccess.com/mastermind. You can learn more about that. Fill out the application there, and then you'll get on the phone with either myself or Tom, and then we'll talk there. And then we have our Active Turnkey book. Man, we're running out of these. The Active Turnkey book. Best Way to Buy Rentals by Tom Olson himself. You guys can pick one up for free. All you got to do is go to atkbook.com and pick it up there. All you got to do is cover shipping costs. So awesome stuff. We are happy about this, and we're getting rid of a bunch. I don't have very many left, so I think you signed this one too. Did you sign this one? This is the one I always have. Yeah, you guys signed it. Work to have to give. Oh, wait, I wasn't supposed to say that, was I? That's a secret message. So make sure you guys go take advantage of that. atkbook.com is where you can get that. And then the Community Go-Giver event, early bird pricing is already on sale right now, and you guys can go get save a couple $100, right? Like, this is an awesome event. We're excited about this. I'll have Tom talk about it here in just a second, but communitygogiver.com is where you can pick up your tickets for that, and it's going to be an intense 3 days. We had Eddie Wilson speak at our very first event, and that was awesome. He talked about Christian Media International. That was in July. The next event's going to be June 26, 27, 28. So, Tom, you want to talk about it a little bit?
Well, we got Eddie on here. He was here. I always like to see what other people's perspective was. Eddie, what do you think about an event that's focused? The whole focus of it is to not just teach people how to do real estate, but to teach people that you can make a difference in your community with real estate.
Yeah, I think it was an awesome event. I think it really melds that kind of purpose of your life thought process together. And I love, you obviously have a very congruent message to what our message is at Think Realty, your work to have to give. I think it says it best when you show it in action at your Community Go-Giver event. You're talking about a community that needs help, how to do that as a real estate investor with the gifts you have, and then ultimately how to give back. So, I recommend it to everybody I come in contact with. I think it's awesome. I think as real estate investors, we need to take responsibility for the areas we live in, especially areas of blight. And, you guys are doing it. And so I commend you, and I definitely recommend the event to anyone.
Good stuff. We appreciate that. So communitygogiver.com is where you can pick up your early bird pricing. Make sure you take advantage of that. So without further ado, let's get into this interview. This is going to be a very intense one, so buckle up. We're going to be talking about the market. We're going to be talking about data, and then a surprise. We got a little bit of a surprise that we're going to be having Eddie talk about here. That's going to be really good for real estate investors. So Eddie, before we get into it, do us a favor. Introduce yourself, who you are, what you do. I already listed off I think about 40 to 50% of what you do. I'm sure there's a lot more that you do, but if you could introduce yourself, that'd be great.
Yeah. So obviously Eddie Wilson, and I've got kind of three buckets of my life. The first bucket, because of my passion to give back, is the nonprofit side of what I do, which is Christian Media International, which broadcasts a message of faith around the world, 103 countries. We've got orphanages tied to it. And it's really the passion of my life. But the thing that makes all of that, or the items that make all that possible, are the other two buckets. The first one is a media organization in Atlanta, Georgia, that's a full service ad agency and creative agency where we help clients find correct branding, then take that brand and communicate it effectively to the public that they're going after, and then find marketing metrics to make sure that they're being successful in what they do. It's that's a big portion of my kind of secular life, but every bit of money that goes into Go Media, which is the company there in Atlanta, Georgia, all profit goes to the nonprofit. Then the third bucket is Affinity Worldwide. Affinity Worldwide is a holding company that owns 80 plus companies. Companies like Think Realty and NREG, or the National Real Estate Insurance Group. Most people know it as REI Guard. We own the American Association of Private Lenders, Private Money Lending Guide, Loan MLS. You just kind of go down that Radius Contracting, and just a lot of different companies that really are geared towards the real estate investment industry. So those are kind of the three buckets of my life. Now, I will tell you, there's an ancillary item that's now outside of those three buckets, and that is I'm launching a coffee brand in the middle of December called Because Coffee. And the reason for that is I love coffee, and it's great coffee with an even greater cause, where all proceeds from that brand that we're launching in the middle of December is going to go to feed the nonprofit as well. So bringing in great coffee from around the world and roasting it in Atlanta, Georgia. And then and it's got a lot of cool twists, and we're going to start telling that story effectively. We just started this past week. You've probably already seen a bunch of stuff on it, but now you'll start to see just a ton of communication that's now lined out through the main launch. So
that's awesome.
So that's an ancillary item.
It's called
One more
Because, right? Because Coffee.
Yes.
Awesome.
Yes.
Cool.
You got it. Because Coffee. And it's like, it's kind of a play on words. It's this idea of, it's obviously tied to the cause that's most passionate to us. But it's like, what, Josh, why are you drinking coffee? Well, it's #because coffee, right? Like, why do you do the things you do? Well, a lot of what I do is just because I need coffee. Like, right, why do I take this route on the way to work? Because coffee. Why do I, say hi to certain people? Oh, because I was on my way to coffee. So anyways, like this kind of whole, funny, whimsical brand, but is ultimately tied to a greater purpose. So
I love that. It's awesome. And I love how he said 80 plus companies for Affinity.
Yeah. Do we ever know at any given time how many that actually is?
No, I just met with Becky, our CFO, about an hour ago, and I was informed of a new one. So yeah, you just don't know. You don't know. She's supposed to. There's like a tripwire. Like if we hit 90, she's got to let me know, because then I can say 90 plus companies. But
yeah,
gotcha.
I'm hoping by the end of the year it goes to like 70 plus companies.
Yeah.
But anyways, yeah, I'd rather go the opposite way right now.
So I actually. Now that you say that, and this is not a planned question, so he probably has no idea, and I'm like just on the spur of the moment thinking, with that many companies, and you kind of even said something that again even triggered me. You said you wish it'd go to 70. So I'm thinking to myself, how do you focus? Like how do you choose your day, what to focus on, and how to which company to work on today? Because if you just focus on one company every single day, you only get to focus on each company, 4 times a year?
Yeah.
3 times a year, 6 times a year maybe? So how do you choose what to focus on?
Yeah, so my life is pretty systematic. I've got a process for just about everything I do. And each one of those companies have an asset leader. I found out, long ago that my strength is really in the vision side. And all while I come from corporate, so I had to learn to implement well. And typically when I share my vision, if I could implement it myself, now I'm in a position where I own a bunch of companies that I get to hire great people that implement my vision. And so most of my time with all of those companies are spent in more visionary activities. So today I probably, even though it's a snow day, anybody that showed up, I think I probably still had 9 meetings today. It was a half hour to an hour with each one of those companies. I think I had 6 or 7 of them in. I have an entire structure of organizational structure that overlaps all those. So an executive team that handle all the items that I don't need to be talking about, human resources, information, money and resources and things like that. And then I dedicate some time to them as well. So it's a very systematic approach where I just stay in my core genius, which is more the visionary activity for each one of those companies. And some of those companies are led by visionaries. So I kind of mold my conversation with them to try to help them become better visionaries. And then there are some that are run by more integrator types. And so I actually have to provide full vision for them. So it really depends, but it's a very systematic approach every week to make sure that we're hitting all of those metrics along the way.
Interesting. I like it. It makes sense.
And then, so let's double down on this a little bit. So then you
Okay.
also said you would like it to be 70 companies.
Yeah.
How do you choose, like if you've got 80 babies out there, how do you choose between the ones that you want to keep or the ones that you might not want to? Because I think there's lots of people out there that might struggle with this.
He's prepared. Look at this.
Exhibit A. This is our financials through October, right? And each one of those have a scorecard attached to them with KPIs. And so I'm actually looking at, yes, financials, but I'm looking at kind of the vision and how well they meld with other companies, you know. And so trying to score each one of them based on profitability to the whole. So we have some standalones that are very profitable, but yet don't provide much health back to the organization as a whole. As long as they stay profitable, you know, we're good, you know, have at it, keep going, grow. The issue is when we have, you know, assets that don't contribute to the betterment of our entire organization and they don't find profitability in a certain time period that we deem necessary. And so that's when, you know, you make the rough decision to cut some of those.
So they need to be trending in the right direction. So there's basically three things, it seems like to me. They got to need profit is one. They need to be trending in the right direction. And number three, what value do they bring to the other parts of the organization?
Right. Yeah, because there's companies in our organization like RentFax, for instance. RentFax will probably never be some highly profitable company inside of our group. However, RentFax is the entire underwriting mechanism for our insurance group. So everybody that submits a property gets a RentFax score. We actually look at that RentFax score, the risk score under RentFax, and we say, based on that risk score, we can assume an underwriting value to it, and then we determine our premiums off of it for all of insurance. So RentFax really isn't in jeopardy of going away. You know, it just I may tweak it a little bit here and there, but it provides a great value to the whole, where that value is not necessarily profit.
Right. Awesome.
Yeah. So
sorry to get you off track.
No, that actually kind of is a good segue.
This is my job as a visionary, right?
That's kind of a good segue into my first question. So staying on the topic of you talked about RentFax and how they're the ones that are able to provide the data to NREG. So let's talk about data. So you came out with a couple of articles, maybe 6 or 7 months ago, for Forbes, being on the Forbes Real Estate Council. And one of them, you talked about how technology and data was used, and it could be in the upcoming crash, and it was used in the previous crash. I know you had mentioned one specific person that you guys interviewed for the Think Realty magazine, and he used that data for predicting what was going to happen in 2007, 2008 downturn. So let's talk about data. So how has data and tech impacted the real estate investing? Let's stay specifically to real estate investing, whether that's fix and flip, rentals, insurance for houses, whatever it is. How has data and tech impacted the real estate community?
Sure. So pre-downturn, 2007, 2008, depending on where you were in the country, there were a lot of people that were using data, but there were few and far between. And they were the ones that avoided oftentimes the greatest pain in that downturn. One of the guys that we interviewed specifically for Think Realty is Bruce. I totally lost Bruce's last name. I'm going to come up with it in 1 second. And so he's out in West Coast, California. The guy's like a legend when it comes to avoiding the crash. He has an entire group in Southern California. And he told them, look, based on these trends, based on the data I see, we're headed to something that's very dangerous. He got taken to Washington, D.C., and was interviewed by all kinds of people like, why do you think this is the case? And he avoided the crash. Well, interesting, after the crash, all of a sudden, everybody's interested in data. And you're seeing companies in kind of this prop tech space and various others, and a lot of venture capital groups coming into these data-driven real estate companies because of what they saw in 2005, 2006, when people were predicting where the real estate market was going. And so today, data as a whole has become an integral part of kind of that 21st century modern real estate investor. We are making a lot more data-driven decisions, whether you realize it or not. 2006, 2007, Zillow, they did have kind of a modicum of what they have today, but it's not even close. I mean, today the Zestimate, even though it has some outliers and some ancillary issues with creating value for property, they're still, they still predict it north of 90% accurate. And so people have so much more access to data today that they never did before, that they're seeing right before their eyes that, didn't really exist in front of them today. So really had one or two companies that talked at this level in 2005, 2006. Now everyone has an element of data. Everyone is talking about their values, predicting where they're going, looking at the national marketplace for, face it, the SFR connotation didn't exist in 2005. Like no one was talking about single family rentals as a legitimate marketplace for investors. Today, Wall Street's involved, so Wall Street provides a ton of data. All the big lenders are involved. You got a big groups, big data companies that are focusing on this area in this arena. Groups like IMN that provide conferences, but also are a data aggregate for this data. So it's a different world today, and it's really changed how we think. The other thing that I believe has happened is real estate investment as a whole in 2005, 2006 was so regionalized. So, people typically didn't invest outside of the market that was at least adjacent to their own. So you had guys that were in Atlanta that invested in Jacksonville, Florida, or Greenville, South Carolina, but you really didn't go beyond that. I mean, except for the big guys. There were some big guys that were, but for the most part, the guy that owned 10, 15, 20 rentals, he didn't go beyond these regionalized marketplaces. Today with data, people are being forced to look at markets that they would never look at before. Like whoever thought about investing in Buffalo, New York, but yet Buffalo over the past 3 years has been a hotbed for real estate investment. Wichita, Kansas. I mean, like Boise, Idaho. I mean, like these ancillary markets that no one in the bigger marketplaces would have thought about now are forced to look at because the data tells us to look there.
Okay, so then when you came to our mastermind in August, you talked about data. We had a breakout session specifically on data and how these guys in the room could use that. And we did get a lot of feedback from the group, and some of these guys were using Atom Data and a couple of other resources that you mentioned. I think was it Real Flow? Yeah, Really Flow. Yeah, it was one of those. Yeah, so let's talk about how. Okay, so we talked about how it's impacting the real estate investing community. Now, how can somebody that's listening to this actually use the data? So you guys just recently partnered, Think Realty just recently partnered with Atom Data, which is awesome, fantastic. So That's one resource that people can use. So what are some ways that somebody that has a real estate business, investing business can use data?
There's lots of different ways to use data. Typically, most people are using data for the acquisition of properties, right? So they use Atom Data or CoreLogic or one of those other big data providers to find off-market leads. They're going to auction.com, so on and so forth, to find data on distressed houses, things like that. I think that real estate investors, by and large, have a lot of that down. There's a lot of products out there. One I featured at the mastermind, Real eFlow, is a great product. It aggregates all that data. It shows you how to get there, provides a direct gateway to those distressed houses. I think for the most part, guys that are doing volume have figured that out. I think where the next kind of evolution is based on, it's this stream of data that happens after you find the property, right? Like just because somebody offers you a property in a distressed area at a distressed price, should you be buying it? And what if you get the chance to buy 50 of them or 100 of them? And that's where I think data needs to come in. So how do I use data there? So first of all, CoreLogic has a portal to find off-market leads. Atom Data has a portal. Real eFlow is a great product that I definitely recommend. There are various others. But, from my perspective, it's like, how do you find the data on where markets are headed? When markets are shifting. Because when you looked at 2007 and 2008, if you were in Atlanta, Georgia, for instance, the recession really didn't hit Atlanta until the latter part of 2008. But Atlanta, a lot of Atlanta investors were still investing in 2008, all while there was parts of the country in 2007 that were already radically changing because of the downturn, but because they didn't understand what was happening on a national scale, that it potentially could get to them. I think they say that Dallas was one of the last cities to really feel the recession because there was such a demand on the properties there. And, so if I was a Dallas investor and I saw a major downturn happening in Memphis, it might cause me to slow down my buying habits or to buy a little bit more effectively in Dallas, knowing that, maybe this is coming our way. The national recession typically hits, downturns typically hit certain areas first and then spread. So if we kind of understand from a data perspective what's going on nationally, we can hedge our bets, so to speak, and make sure that we're investing properly. I think that there's a lot of reports. Atom Data is a great provider of data when it comes to the distressed markets of our country, and when you look at demand. So they come out with stuff every single month that's amazing, and a lot of that's going to be provided in Think Realty starting in January, where we're going to highlight these markets and constantly be putting out data showing where these markets are moving. How many days on market real estate's sitting, what the inventory situation looks like, so on and so forth. And to me, I think if you're doing volume in any city, I live in Atlanta, I also live part-time in Kansas City. I feel like I got a pretty good handle on those two markets. But if I was investing investing in turnkeys, with you guys up in Northwest Indiana, if I wasn't savvy enough to understand where to find that data, how would I know? How would I know where the market's going, how it's turning, when it's turning? And a lot of guys, I can't find inventory in Atlanta. So I'm forced to be a passive investor everywhere else. So I better understand as a passive investor where the markets are moving so that I can make, adjustments therewith. So to me, Atom is probably one of the greatest sources because Atom provides commentary on the data you see. So, CoreLogic and a lot of other data providers provide the data. That doesn't mean that we understand it. Atom goes as far as providing commentary on that data so that we can digest it and understand it, based on the national housing economy. But I think that there are some trends that we should watch out for. I think something that we should be looking at today from a data perspective is we should be watching where commercial real estate is going. Commercial real estate has morphed. You've got, I forget the statistic, but you've got hundreds of malls going out of business, and they're trying to figure out what to do with these big, giant parcels of land and buildings, grocery stores, so on and so forth, all while Amazon's building new headquarters buildings and bringing thousands of jobs to certain regions, So watching where commercial real estate is going is so important to the housing market, because where there are jobs, obviously the next thing to follow is housing, whether it's rentals or new builds or renovating old stuff. I think that's a very important concept for people to understand. Where is commercial real estate moving? Because ultimately commercial real estate always provides jobs. You guys have a big initiative going on in Northwest Indiana with steel right now. Watching trends like that will spark the economy in that area, and it's going to do something. The one thing it always will do is provide more demand on housing, so those are great key indicators. So it's not just looking at like data points and stuff like commentary like Atom provides on those data points. It's looking at the national news. It's literally watching for these key indicators. Watching, Crystal City right now outside of DC, which is where the new Amazon building is going, that's going to be a massive hotbed for real estate investment. You take a 20-mile circle around that area, Crystal City, and you go west, and there are some little tiny markets there right now that have houses that you can buy for $125,000 that need renovated. I mean, like, if I was an active real estate investor in that area, I would be looking at that, drawing a circle and going and driving those neighborhoods and feeling and trying to realize how to or trying to figure out how to buy those houses. So.
Yeah, I'm glad you brought that up, because I keep saying to myself, and I haven't really like expressed this openly too much, but what I don't understand is, why don't grocery stores, why don't malls, why don't everybody? Walmart's gotten in front of this. If you've seen, Walmart and Amazon are almost competing for top online sellers. But it seems like if I was a grocery store, if I was any kind of company that was in a mall, I'd be trying to set my store up where half of it was a warehouse and half of it was, and I'd be going after the online buyers, and I'd be setting up my whole store in which I could press a button and somehow that box would get shipped to the back of the. And actually, if you think about it, even grocery stores got to start thinking this way because of Instacart and all these other technologies that are coming into the marketplace. I mean, we barely ever go to the grocery store anymore because we have Instacart, we have everything else that has. And that's one of the reasons why I love Gary, Indiana, because I believe that this is going to be a logistics hub. And you said commercial, but I also think you have to look at industrial and how it could change. That you won't need as much commercial anymore. You probably actually need more shipping and more industrial type logistic companies. And where do you have space to be able to put those? And I think that's one of the reasons why I think Gary, Indiana, with having logistics of the airport expansion, with us being right on Lake Michigan, with I-65 and the expressways going north and south, or east and west, coast to coast, puts us in a great location for that. We actually got an Amazon distribution center in Gary as well, which is kind of a big deal. I think long term could turn into something big as well. But so you talked about the acquisition and people using data to acquire, and I'm glad you kind of brought it back circle on who's buying the real estate and what drives the demand, because I think that's the other piece that is just as important as trying to acquire. So all great points, and I'm glad we got to talk about all those.
Yeah, absolutely.
So one thing I did want to add, because I didn't hear you say it, but because you did mention Dallas, if you go back and look at the data and just understand that the parts of the country, like for instance Boston, I think had tripled in value. The prices had tripled before it crashed.
Right.
Dallas never really saw a major downturn in prices. They may have felt it a little bit, and their rents kind of softened a little bit during it, but they never had a major uptick before that, and it's just been roaring ever since then because of population demand. So I think there's a lot more to consider with the data, and a lot of it has to do with, like you just said, where's the population moving to, what other key factors that are come in front of that demand that you want to look out for. And I think that's where you have to pay attention. It's not just what's current, it's what's coming.
So the thing that I hear constantly is millennial. Everybody's been talking about the past 10 years about the millennials. Well, they're finally starting to buy houses. Well, here's the deal. I haven't heard anybody talking and predicting what the millennials are going to want in housing. So the millennials have been spending, twice the amount in rents than a traditional first-time home buyer, and expecting granite and expecting all these different things. But no one's really talking about the location of the millennial. The one thing that I'm interested in is, I believe that the millennial, from a predictive analysis, is going to want to, I think one thing, live closest to the things they're passionate about, right? So they're going to want to live closer to outdoor activities. They're going to live closer to their work. They don't want to lose time in commuting, things like that. So, and we've seen for a period of time that millennials are willing to forego size, these big, giant suburban houses, to be closer to the things they're passionate about. If millennials start buying houses closest to their work and their jobs, and they're going to forego the commutes, I think it's going to radically change, our strategies as real estate investors. It's just one more trend that we got to be aware of. Right down the road in Kansas City, an area that's less desirable, called Raytown, is where Cerner, which is a big employer here in Kansas City, just built a brand new high-rise building. They're going to employ a couple thousand people. And the first thing that Cerner did was they came in and bought up all the vacant land in all the neighborhoods. What they realized is they're about to employ a bunch of millennials, and every one of those millennials are going to want to live within the time period. So they built the big building, they own all the land, then they put in bike paths and walking paths and all these outdoor activities, dog parks, and now they're starting to build houses. I think that's a brilliant move. They've created their own ecosystem. And I think as real estate investors, we would do well to try to predict who the next home buyer is and where they're buying as well.
Yeah, a lot of great points. I like the word you use, ecosystem, because you're really creating that environment for that millennial that's going to be, or the employee that's going to be moving there. So
yeah, and
absolutely.
then to go on the flip side of that, so yes, like building, trying to offer things to the millennials and that buyer that they need, but you also, on the other side, you're going to have a bunch of people that probably are going to go into senior assisted living. So like that's a whole nother market that's now being created that they say in the next 10 years is just going to explode because of where we're at in the market and what they're going to want. And it was kind of funny. Me and my wife were talking about this, and for some reason she likes this show, and it's I think it's horrendous. I can't stand it. It's called The Golden Girls. Have you seen The Golden Girls?
Yeah.
I don't get it. I just think
They
it's the
all
worst
live
show.
together.
Yeah. She's like, why don't we do that? She's like, it'd be a sorority for like old women or something.
What?
I think,
Let her start it.
I think you guys know Gene Garino. I mean, like
Yeah.
Gene Garino, when he talks about assisted livings with housing, it is interesting. He uses the Golden Girls model, for his rental properties. But
That's
anyways,
hilarious. I did not know. I know Gene, but I did not know that
Yeah, I
he
didn't know that.
uses that. But
That's
my wife just thinks that would be the best thing in the world. She's like, we should do non-assisted living, not assisted living, non-assisted living.
Anti-assisted, yeah.
Yeah.
Anti-assisted living. Okay, so let's kind of move this along here, and we're going to stay on the same track. So we've been talking about data, but it kind of turned into market trends and talking about what markets are, what you need to look out for with the markets and any downturns that are coming up. So you also produced an article on the Forbes, when you being on the Forbes Real Estate Council. Sorry, I couldn't get my words there. And you talked about the predicted 2020 downturn from,
Right.
I believe it was the Zillow, they had a bunch of people that kind of talked about it. And I think almost half of them like confirmed that was the 2020, that was going to be it. So what's your take on that, on the predicted 2020 downturn? What is your crystal ball telling you?
Yeah, so I really questioned that report as a few others did, and they had it was a big collaborative group of people that came together and looked at all the analytics and said, between 2019 and 2020 we're going to see practically a recession, a big downturn. I think what I'm seeing today. So my article, I came out and I kind of challenged that whole notion. I think we're still on a rise. We have seen a slowing in the housing market. Now, the slowing, I've yet to hear a great explanation of why there's a slowing. I've heard it tied to the election cycle. I've heard it tied to various things. But what I haven't heard somebody say is that really what's happening is we had such a massive surge because you were in a recession, and then as we climbed out of it, people were going crazy, finding plenty of opportunity. There's tons of capital in the market. There's inventory. And we just bought up all the inventory. You can't go to any real estate group where somebody isn't talking about the fact that they're struggling to find properties. It's tough. And then they're all talking about the markets where they're finding properties. So I got buddies that are in Atlanta buying all of these properties in the rough areas of Cleveland, Ohio, because there's an inventory shortage. Well, and then they say, well, housing is slowed in Atlanta. Well, I could have told you it would slow in Atlanta because, 6 months ago, all of my real estate buddies that were buying 30, 40, 50 houses a month all said, I can't find inventory, so it has to slow. With less demand, it becomes less, with more demand and less inventory becomes less purchase, right? So I really believe this is what's going to happen. And it's based on a couple of factors. I believe that there's still more capital that can ever be consumed still on the market. And it's still trying to find a way in. We just had our American Association of Private Lenders event in Las Vegas. And you saw lenders and private guys that have their IRAs, guys that have turned all their capital into a lending stack, and they're lending at percentages. And what you're finding is they're still struggling to find inventory too. They need to deploy capital. So there's still a ton of capital sitting there. Their desire to find a return on that capital has never gone away. You're seeing an inventory shortage, and so therefore you're seeing a leveling off, or what the pundits are calling a slowing down. I think it's just a leveling off, and a return to normalcy. I think what's going to happen, my prediction is instead of there being a downturn between 2019 and 2020, sometime, in the next 10 months to 20 months, I think what's going to happen is we're going to see a leveling off for a short period of time. And I think we're going to see one more surge. I could see one more surge coming before I could see a downturn coming. Now, there's two factors I believe that are going to ultimately change that. Number one, the national economy is always affected by a presidential election, and you could see that surge thwarted or at least curtailed depending on how vicious that election becomes. The other thing is national media, right? Like national media has already convinced most people that we're returning back to a recession style economy. Well, there's very little data to prove that, like we're still seeing, ask the retailers right now that have seen record sales, for Black Friday, if they've seen a tapering off. They haven't. There's still more capital. I have more millionaire buddies that are trying to figure out how to put their money into the marketplace that don't care about a recession, because in the end, they just need to find a return. And if they find a 3 or 4% return right now on the money that's just sitting there, they would probably be pretty happy, guys that have foregone I need 10 or 12% return now saying I'm happy with 8, right? Because there's still so much capital sitting there. So I think what's going to happen is we're going to see in the next 6 months just a leveling, right? Like, it's the end of the year. Obviously, it's Christmas time. The market always levels off this time. I think there's going to be a key indicator in January and February. If you start to see a % or 2 increase, I believe there's going to be a surge that comes during the summertime or fall of 2019. And I think that could last for a year. And that's based on the capital that's on the marketplace today. But I think it's also based on previous trends. So like in my article that I published, I went all the way back to the Great Recession. I said, there's an elongated cycle because of a downturn. And, I gave all this kind of predictive analysis on it. And I think what you're seeing is that there is a large portion of data that supports that before a recession, there's always a surge. We saw it in 2006. We saw kind of this constant climbing, and then all of a sudden big surge, and then it started the downfall. What I'm hoping happens, okay, perfect case scenario, we start to level off through February and March. We start to see an increase and a rise, and we see a surge come summer and fall. And then the election cycle takes us right back down into normalcy, right? Like it basically curtails the surge, and then we level off through that time period and maintain. And then I think we're going to avoid what everybody thinks is going to be a recession. The other point that I made and I got a lot of flack for is I made this statement. I said, we have never seen a recession happen in the same way ever in the history of the United States. A recession in the single family housing industry, which just happened, had never happened in the past. However, we saw massive recession in the areas of industry, massive recession in the areas of commerce and trade, massive, and we've seen recessions, but we've never seen one in the same industry. So it's going to be interesting to see what's going to happen. And I think where the true recession is going to hit, if I could predict it, would be in that commercial space. We're going to overbuild so heavy right now that, these Amazon warehouses, what's going to happen is we've seen a whole new industry, blossom out of what Amazon has created. Amazon's building these massive warehouses. I think Amazon in the next year or two is going to figure out how to do it more efficiently and not need that much space. And so I think that's where your recession is going to happen, is I think it's going to happen through innovation when we figure out how to be more efficient with our current models.
Interesting.
Well, and what is technology going to do? I mean, think about if self-driving cars are a reality, Uber drivers are out of business. I mean, literally, right. Truck drivers could be out of business in 20, 50 years. So, like, it's going to completely revolutionize and change complete industries, which, is a whole another topic.
It is. But I mean, I think that there's a couple of pieces there. I mean, I really struggled because a self-driving car went to pick me up in Vegas 2 weeks ago, and I just wasn't sure if I should get in it. I don't know if this is a good idea or not, but everything inside of me said, get in and try it and just film the experience, so I did, and it worked fine, like it was really scary, but it worked great. The Hyperloop that's being built between Los Angeles and San Francisco. I mean, if you can commute from San Francisco to Los Angeles or vice versa in an hour, I think it may crush the San Francisco marketplace.
Big time.
It's that they're like the Boston of 2005. I mean, they've seen triple, quadruple, exponential increases in the real estate value. And so you got all these technology pieces happening, and that has to affect the marketplace. It has to.
That's interesting. So you're saying that the next crash may not even be a real estate crash, because
I don't think it will be. And I think the reason is because our population today can sustain how much real estate inventory is on the market, and we are growing as a population center. Like depending on where we go with immigration laws and so on and so forth, we're still growing. And so, I mean, you read national news all the time. It's like we have a dearth of new builds in the United States. Like we need new housing, we need new homes, and it's like, and can you imagine if the Hyperloop gets built from San Francisco into Reno, Nevada? Well, I mean, there's probably a lot of people that'd rather live out in Reno, and look at the mountains every day than live in rainy San Francisco.
Yeah.
That take an hour commute in. Well, that changes drastically. So anyways, there's so many key factors that I don't think it's a housing crash or a housing, recession.
I just have to say this. There are so many people that want to tout, I'm a contrarian. I'm going in the opposite direction. But like when every single person is saying there's going to be a crash, that you're no longer the contrarian anymore. The contrarian is the person that is saying, no, I'm going to go in the opposite direction of what everybody else thinks. And I'm 100% with you. And I've been saying this. I don't think we're going to see some major thing until the mid 2020s, 2024, 2025, 2026. And it could be devastating. It could be crazy. But where does the crash always happen? The crash always happens where you least expect it. It never had. We didn't think real estate was going to crash in 2006. Okay, so now everybody thinks real estate is going to crash in 2020. I don't believe it's going to happen because too many people are calling for it to happen.
So do you think that proper precautions are being put in place for that, because of that statement?
Well, just the fact that so many people are saying it is almost like negating the fact that it's going to happen. So like to me, like you can't be contrarian if everybody's contrarian.
The thing is it's like, so what's happening right now? So Bruce Norris is the name I was trying to come up with, earlier. Bruce is like this amazing guy in Southern California. And I was just listening to his podcast the other day and he's kind of talking about some of these issues. And he hasn't really put out a big analysis on where he thinks it's going to go. He's just throwing out data right now, like parsing data. And I think that's probably a wise place to be, because there isn't enough key indicators to watch whether we're going up, down, receding, whatever. The thing is I kind of agree with you. When everybody points in one direction, I feel like it's nearly impossible for that to be the accurate direction.
Right.
Like it's kind of crowd speak. Like I think everybody read the Zillow report, and then all of a sudden you had all the mainstream media going, "Oh, this must be the case," and now you have the loudest voices speaking with the least amount of knowledge, and then everybody with the most amount of knowledge is buying into it and parroting it. I mean, like I can't tell you how many conferences I've been at where everybody says 18 months seems to always be the magical number, right? Like in the next 18 months, like it's like who.
But I've been hearing this since 2015.
I know. I started hearing it in 2015, like 18 months. That's all we got, 18 months. It's like, I don't know. I mean, like, I think that it does take a while for a trend to play itself out. So, I mean, you probably need 8 to 10 months to kind of watch where things are going. But, if I'm betting on 18 months and I started 2 years ago, boy, I would have missed out on a lot of opportunity. So I think that, with every real estate investment, there comes a level of prudence, and there were people that were buying houses and buying land and developments in 2007 that were doing it at a level that they never conceived of doing it they just did it because it seemed like the right thing to do. You know, I'm more nervous about the guy who just got into real estate investing last year because he couldn't find anything else to invest in. He was losing in the stock market. He jumped in, and now he has no knowledge. He has no education. He has nobody to look to. He doesn't have a mastermind to go to, and he's missing out on this greater bed of knowledge. And he's out there throwing millions of dollars into real estate. That's the guy that's going to get hurt because there's not enough. You know, like in a multitude of witnesses, there's safety, right? There's wisdom, there's knowledge. And it's like, we've got to make sure that we're putting ourselves around people that know what they're doing. I'm more afraid of the novice that's out there with a bunch of money. They're the ones that are going to get hurt.
Okay. I totally agree. And the other thing to consider is real estate still is local. It may be more localized than it's ever been. There are places in the country that never saw a downturn. Washington, D.C. never saw a downturn in 2006, 2007, 2008, 2009. Like their houses prices just kept going crazy. So know whatever market you're investing in and use data to be able to make that happen. I think is definitely something that you and be a part of the Good Success Mastermind,
there
right,
you go.
Josh?
Yeah.
You know, so like get yourself a group of people that on both sides are going to give you pros and cons, you know what's going on in different parts of the country. I think that's very important. I can just tell you what's going on in our local market. So our local market, anything that's over $300,000 has softened. So anything over three, and we've basically saw that instantaneously as soon as the interest rates started to rise. So I think that is a key factor to consider with this. But at the exact same time that's happened, we've seen prices go berserk under $100,000. So now we're seeing houses in Gary, Indiana, which have never traded over $40,000 in the last 10 years, now selling at $100,000. We're having retail comps in Gary, Indiana at $100,000, and it just came out of nowhere, and it happened instantaneously when interest rates went up. So, and that's something that's different than that's ever happened before in a real estate crash. Normally it's the low end that kind of softens and bottoms out. And now we're kind of seeing that top end. I actually think we're going to see a sandwich kind of happen over the next 2 or 3 or 4 years where those sub 100, I think we're going to push everything up above 150 and we'll kind of see this 150 to 250 range where all those higher priced houses where people may not be able to afford in some of those areas of the country because of interest rates. Now they're going to have to kind of go down into the little lower bracket. So that's just my take on the whole thing of what I see coming in locally, at least. That's what I see happening here. And most of the guys in my mastermind are seeing that as well.
Interesting stuff. No, so that was a great topic, great conversation there. But we got to switch tracks. We've had Eddie on the podcast for a while, so
okay.
we gotta cut this off. But we'll have him back on. And then if you guys are interested, maybe in the show notes or in the Facebook description here, we'll leave the links to Eddie's Forbes articles for you guys to check those out and read those. So make sure you do that because you'll get a little bit of an understanding of the structure of where these questions came from. So Eddie, I got one more question, then we're going to round it off with our final 2 questions, which we ask everybody that we get on the interviews here. So let's talk about Think Realty's Day on the Hill. So this is one of those things that we didn't really want to make public right now, like immediately, but we actually Tom brought this up at our mastermind and said, hey guys, what do you think about this? Open it up to the room. I think we got some really good feedback. I think it was very impressive. So we'll make sure that we get all that feedback over to Eddie. But
already done.
Eddie, you already did. All right, well, there you go. Bingo.
Yeah, we got it.
Awesome. So let's go ahead and talk about that. So what's going on with this?
So in April, we have our Baltimore conference. And as a part of that, we have a group of guys that are influencers in the marketplace that are part of our leadership circle. And so I wanted to put a day together on the Hill, the Capitol Hill, where we start talking and having conversations with legislators. What I found is I sit on a subcommittee with our government, and very few conversations are happening with them understanding what real estate investors are doing, what their, what their motivators are, how they have this very limited perception of who real estate investors are. When I talked about, one day I was sitting in subcommittee and I started talking about people self-directing their IRAs. And I remember like half the heads turning in the room going, what? And I said, yeah, like a large majority of what's happening in the United States right now is a passive investment out of people's, out of their self-directed IRAs, their retirement accounts. And they were like, is that true? And literally like it's like everybody in the room, and it's just, and our legislators just are unaware of what's going on in our space. So I wanted to make sure that we touted that conversation, and controlled it to a degree, because they need to hear who we are. They need to understand who we are. They need to understand that this is a sophisticated group of guys now. This isn't, a mom and pop who's just buying rental properties in his neighborhood and trying to build wealth that way. These guys are sophisticated. They're some of the guys, especially in your group, are doing hundreds of deals and have an opinion and have a valid opinion. And so opinions on like affordable housing and structuring, for instance, one of the topics that came out of the mastermind that, was asked to be talked about was, the limits on only getting, 10 conventional mortgages and, and so on and so forth. And so all these limitations that the government has put on us to make sure that we're not pushing the boundaries. They didn't understand that there's a sophisticated level of conversation that's going on and thought. And so we want to put that in front of them. And then we want it to be a roundtable. So they're going to talk to us about their initiatives, what they're trying to accomplish, what they see with affordable housing, what they feel the pain points are. Because I think us in tandem working together is a whole lot better than us kind of sitting in back rooms just pointing fingers at our legislators going, they don't know who we are. They don't know what we're going through. They make these laws that are too tenant friendly or, not landlord friendly enough. And, we kind of sit there as armchair quarterbacks, and it's like, it's time we get into the conversation. So that happens in April and right around the beginning of our conference there. And we're going to hopefully have 20 to 30 really high end real estate investors. We've asked some of the guys as a part of your mastermind to be there. I know, Tom, you'll be there. And so that is a big initiative that we're going to start a two-way conversation through Think Realty with our legislators to make sure that our legislators know who real estate investors are and our real estate investors understand the pain points of the legislators.
Giving us a voice in Washington.
Absolutely.
Yes.
That's a
because we don't really have a voice, right? You got realtors have a voice, lenders, banks have a voice, but the real estate investor really doesn't have a voice. And I really appreciate Think Realty for that initiative.
Yeah, huge step for you guys. So, and really sticking your necks out there for the entire real estate investing community. That's absolutely fantastic. So, well, good to hear. We appreciate that. So that is, you said before the Baltimore event, the expo. Mm-hmm. Okay, awesome. So you guys go to thinkrealty.com to check out the expo. Make sure and that's in April over in Baltimore. We'll be there for sure. So you guys will see us there, and of course Eddie. So awesome stuff. Well, we're gonna round this out. We got two more questions for you. We're asking this. I've had you on the podcast before. I think it was like episode 90 something, and we talked about branding. So we really focused on the brand side of things for a company and really getting your name out there. So we had that conversation, but that was way back then. This is episode, I believe, 141. So we have had a lot of interviews since then. So good success means a lot to us. You known us since day one. The first time we even talked about good success, we came out there to Kansas City, and I was actually going to say this was like 3 years ago.
It's been a while.
This month.
Yes.
Yes, because we were out there in November, and I remember how the Kansas City weather does not mess around. And I'm like, man, I thought Chicago was cold, but Kansas City doesn't mess around. But anyway, so you know what we're all about. So when you think of good success, as the term good success obviously comes from the Bible, Joshua 1:8, and you know that. What do you think about? What's the first thing that comes to mind when you hear good success?
Well, I mean, I've always bought into the vision that you guys had, and I guess I probably have a little bit deeper thought about that just because we did talk about it 3 years ago. And obviously Go Media built the good success logo and brand. So I've got the chance to ask a lot of questions. So I got a lot of thought on that. Yeah. But good success to me just does come down to the quality of your success. And I think that you've heard me talk many times, especially in the mastermind group. I may have enough money to go buy a Ferrari and take, and all my flights, be on a private jet, and I could sit out there and take selfies of myself and show off, my wealth and my success. But that doesn't speak to the quality of my success. I'd rather take an orphan in my arms and take a selfie with an orphan that we're helping, or talk to people that have been changed by the message of faith around the world and show off them, because to me, that's good success. Good success is the quality of your success. It's not just, hey, my goal is to be a millionaire by the time I was 25, or, whatever it is, all these different, pinnacles that people put on their lives. I think that true success impacts others, shallow success impacts you, so I think that, that there's a level of quality there.
I'm just writing that down real quick.
And that and this is, I'm very glad to be able to hear that from Eddie, because that really does embody what good success is, and that's why we gave Eddie the Good Success Award last year, because I believe that he loves forward. Like, that's the first thing he thinks about is how can I impact somebody else? How can I take what I've been given and give to somebody else? How can I be a good steward and take responsibility for everything in my life? How can I, focus on the community, and whether it's I'm working for them or I'm giving to them, I'm still focusing on that community. And how can I grow in that every single day? How can I give more, love more, be a better steward, and have a better community every single day and improve that every single day? So,
100%.
Can't agree with you more, Eddie. Thank you for that.
Love that. Absolutely. So then the last thing here that we're going to ask you to do. So you got to leave one thing for the audience. So whether it's a quote, a thought, piece of advice, you've left us a lot of nuggets today. So I don't know, maybe I'm sure you have some left in the tank, but leave us with one thing, leave the audience with one thing. What would that be?
I have been on this quest of minimalism and been reading all kinds of books over the past 2 months. And trying to rid myself of things that just don't matter, because everything in my life, making too many decisions in a day, making decisions that just don't matter, picking out clothes, everything, comes down to time, to resources. And, to me, I think that a sophisticated, growing, mature person who has a passion to make an impact on the world has to be able to dice his day down into small pieces and get rid of the things that just don't matter. And so I've been on this quest. To me, it's been everything. It started probably 3 years ago when I got this, Brian Ellis actually posted the other day, was asking questions about speed reading. I started, working so hard on speed reading 2 or 3 years ago, because in my mind, I thought if I could just absorb more information faster, then I could go to something else. I could actually put the information to work faster, and so everything in my life has been boiled down to that. And so, it's everything in my life trying to get down. Like I get made fun of that. My team made me a bobblehead doll, and my bobblehead doll, which is hilarious. They think it's so funny. It's got blue pants and a blue shirt and a brown belt and brown shoes. And they're like, and it's like, that's what Eddie wears. And it's like, yeah, days, that's pretty much what I wear. I wear things that matter most and getting rid of the things that don't. That concept of minimalism, I would encourage anybody to work on in their life.
Yeah, I concur with that, because personal experience, I kind of took on the minimalist life about, I don't know, maybe 7 or 8 months ago. I saw the documentary on Netflix. I'm not sure if you ended up seeing that. Mm-hmm. And they hit it from a bunch of different angles, and I'm just like, man, that all makes sense. Like, down to the clothes you wear, the time that you're spending, the time you're investing, your money, like it's everything. It's really a lifestyle as opposed to a kind of a diet situation, right? So. I know it's for me, just my clothes. I've got Aaron Chapman he's in our mastermind. He doesn't really express it, but he's a minimalist too. He has the exact same black shirt, exact same pants. And there's been a lot of successful people that take on that. And they have different, reasons for doing it. But yeah, absolutely. I love that. All right. Well, that's going to do it for the episode today. Eddie, we appreciate you jumping on, taking time with us. And, man, we're going to have you back soon. We hope to see you in February at the Mastermind. And then following that next week, we'll be at Dallas and Think Realty. So awesome.
Very good.
Back to back in Dallas.
Awesome. So that is going to do it for today's episode, guys. Thank you so much for listening in. And remember, if you have not already, subscribe to the Good Success Podcast. And then we got our Good Success Mastermind coming up February 4th through 8th. It is actually the week before Dallas Think Realty. So make sure you check that out if you're in the Dallas region, especially. So Good Success Mastermind, or goodsuccess.com/mastermind is where you can check that out. Fill out the application. You'll talk to either myself or Tom. And then the ATK book. So the best way to buy rentals. Pick it up, your free copy, atkbook.com. We'll send you this, and it's signed by Tom himself. Tom's going to pay for it. All you got to do is cover shipping and handling costs, and you can pick yours up. So that's going to do it for today's episode. We appreciate you jumping on and listening to our podcast. And remember to be a conduit and not a bucket.
Work to have to give.
Catch you guys on the next one. Thank you so much for listening to this Good Success podcast episode. Make sure to subscribe to us. We're on iTunes, Google Play, Stitcher, Anchor, or Spotify, any one of those platforms, however you like to listen to your podcast. Make sure you subscribe. And just a quick reminder to go pick up your free copy of the Active Turnkey book. It's absolutely free. Just cover the shipping costs and we'll pay for the book. Just head over to goodsuccess.com/ATK book. Again, that's goodsuccess.com/ATK book. And you can pick up the book there. So make sure you go do that. Thank you for listening. And remember to be a conduit, not a bucket.